Hi everyone, have you guys heard about REITs? REITs is the abbreviation for Real Estate Investment Trust. To the uninitiated, REITs is not something to be feared because once you get all the scary financial jargon out of the way, you will understand how you can make REITs work for you. Here are 5 basic things about REITs broken down into easily digestible information. Number 1. REITs investment is straightforward. REIT investment allows you to profit from commercial properties rental income. Types of commercial properties are office, industrial, retail, hotel, or it can even be mixed, which is a combination of what I have stated. It may also include hospital, education, business, and also plantation. Each REIT is managed by a trust, for example, a group of professionals who make all the big decisions. Multiple properties managed by the same trust is common. Rental income can come from retail shops at malls, for example, H&M to Guardian, office lots at office buildings, medical, logistical, industrial, and educational institutions at whole buildings, hotels at hotel buildings, and more, as long as they are commercial, not residential properties. It's quite easy to see any good performing REITs in action. Go to any of their properties and see the rate of tenant occupancy. If there are many shops, more than 80% occupied, and many people at the building, that is a good sign. The process to add REITs in your portfolio is similar to stocks. Get a CDS account and go from there.
Number 2. REITs from a fundamental analysis approach. I will explain the difference between fundamental analysis and technical analysis. Fundamental analysis assesses factors that make the investment good or bad. It is suitable for a long-term investing. I think the property will continue to attract renters and yields a steady passive income because of its proximity to an expanding university. Technical analysis, the type of investing, it doesn't matter. The profit potential based on the chart, mainly for short-term trading. Based on indicator, there is a strong likelihood that the market will correct itself and the price will decrease. Both fundamental analysis and technical analysis approaches work, but pick a primary approach because using both can sometimes give you contradicting results and get you stuck in analysis paralysis. By taking the fundamental analysis approach for REITs, the following must be considered. Number 1. Because a concentrate is growing, REITs that concentrate on the retail, for example, shopping mall, may lose tenants as they can compete with online shop. Number 2. Likewise, e-commerce is likely to help push REITs in the logistics industry. Number 3. Booming tourism means REITs in the hospitality and or tourism sector have a good chance of doing well. And lastly, REITs that include the medical industry might do well as Malaysia is said to be an aging population by 2030. The analysis above are examples. There are more things to take into consideration. There is no one correct answer. They can even be personal opinions.
Number 3. How to select the right REITs. Using simplified fundamental analysis, focus on the following. Number 1. The dividend yield. Did the REIT yield steady or growing returns in previous years? If yes, that is a good indicator. And then look at the growth potential. Will the rental demand for the properties increase or decrease in 5 years? Also, look at related risks. Is the REIT in a financially stable position? Whatever its asset value, they must have less than 45% of debts. For example, if they manage 100 million ringgit worth of properties, the debt must be less than 45 million ringgit. They also must have a good interest coverage ratio, which is more than 3. That is good.
Number 4, where to find information on REITs. Number 1, Bursa Marketplace. Go to the market, select REITs for a list of all available REITs in Malaysia. Click on each for more info. Number 2, malaysiastock.biz. Go to the market, select REITs and stock quote, and go to the REITs page. Number 3, the complete guide to REITs in Malaysia by Dividend Magic. Number 4, which CDS account to open start investing REITs, including in the handy stock guide also by Dividend Magic. Lastly, REITs individual websites. Google their names and their websites should pop up. The website should contain reports, type of properties managed, individual behind, and trust more.
Lastly, number 5. Which REITs are considered good? This result is based on a small sample size, which is only 80 people and above in the survey, based on the data collected as of April 2017 and heavily biased as the results page were constantly refreshed. There is a possibility that survey takers simply voted on whatever the rest voted. The top REITs that those in the survey thought might do well, sorted by popularity, are Sun REIT, IGB REIT, Hector, YLT REIT, PEV REIT, KLCC, and also MQ REIT. But don't take the results too seriously and do your own research. There are only 18 REITs, which is 4 Sharia compliant REITs, for example KLCC, ELS REIT, Alakar, and Axis REIT, as opposed to hundreds of stocks. So there is no excuse not to do your homework. In conclusion, REITs are just like the stocks version of property. So if you like stocks and properties, it might be a good option for you. The bottom line is, if you think the properties are managed properly, for example, they have good maintenance and they can attract tenants, it means that it has potential. Think of it from the tenant's point of view. If I have a shop or office, would I rent here? That's all for our video today. We really hope that you enjoy our video on the 5 basic things about REITs. So, start investing in REITs today.